Can't stop, won't stop, GameStop. So I'm on the IWM here. And so today we get the continuation of the uphill W pullback continuation. So IWM is leading and the small stocks are leading, and GME being the champion super meme of the IWM of the Russell 2000 once again moves early before the rest of the market and continuation pattern to the upside. We'll take a look at some levels here, and yeah, please like, share, comment, subscribe. Not financial advice, as always. I apologize if my microphone sucks. This is a new computer. I'm in Mexico, and well, I don't have a webcam on this thing either, actually, but I do have 2K screen capture, so you get good visuals here and bad audio. Let me go into the hour chart on GameStop. I just showed the same thing I showed the last 2 days, is the flagpole breakout on top continuation, and this looks pretty solid. These are all tails up here. Like, this is already a breakout, but we're running into a level here where we'll find some resistance. But if we go back and take a look at the S&P, we get a similar kind of pattern here, where we get, sort of a breakout on top and on top of the mega level here, which is the top of our pandemic megaphone, which it looks like it's going to hold, and it looks like IWM is going to lead the S&P bullish. And I guess I was just looking at some options chains today, and there's a bunch of options right up here at the top at like 42. Call options start coming in. So the market probably would like to stay consolidating in this area sideways forever, and let all the options expire worthless. But like the next week or two, there's a bunch of options up here. But yeah, if it breaks through, then it can really run. So we'll see. Yeah, I mean, we'll see tomorrow on the S&P what kind of follow through we get. On the Nasdaq, it's just like a little bit weaker than the S&P. So the Nasdaq is not looking like a leading sector now. We see stuff like Tesla not rallying yet, but I have a feeling as soon as we pick up, the Nasdaq will rotate in and it might start leading again. So this is kind of like an early move on GameStop. Maybe even close some GameStop. I might close some GameStop trades. I'm like way overexposed on GameStop right now, and see if I get a big move. Maybe there's more of a flagpole on GameStop. I might rotate into some other like Nasdaq stocks or something. AMC doesn't look to be having the firepower that GameStop has right now. It's also in the Russell, but like GME is the first mover. So that's just the story for right now. In terms of the Russell and the meme stocks and stuff, GME is what's moving right now, and that might rotate soon. Just take a look at a couple other ones. Yeah, like the fuel cell, and this is in the Nasdaq, but this had a super aggressive uphill W continuation. So this is another pattern that's great. Workhorse is a little bit weaker, but similar pattern. And then as we go into some other sectors, they don't have the shape. TCAT is like art, Sens is medical, it's diabetes. And then, yeah, I guess that's the general idea of what's happening today. I wanted to go back into GameStop and look at price targets. I need to go on the daily where my lines fit. And just, an upside breakout is probably aiming for this sort of 250 area. This is the area where we keep bumping into resistance. We got pulled down. If we're going to make a bullish run, 250 is kind of an obvious target. I have the tag on 285. That's if it goes slow. I think GameStop's going to move faster. And I think that this double resistance is going to be a good area to bail on this trade and just see what happens. But as soon as we get up into this next channel, as long as we're making a bullish move, I think GameStop can easily just punch right here. And then probably probably reevaluate what's going on at that point. That was the general idea of this video, was just that the GameStop leading the IWM and the IWM leading the market. Um, Looks like it's playing it out, and it looks like we are trying to get a bull breakout now, but we haven't quite broken out. And obviously we're not out of the bearish area, so there's resistance every 100 on on the market. But the dollar looks like it is in some sort of a flagging sideways or downtrend, which is a good thing. The strength of the dollar is not holding the market down. High yield is looking bearish, and this is one that needs to really punch through if we're going to get an actual bull move. The treasuries have been weird and actually terrible indicator of the market, because they've been coming down at the same time the market's coming down. Like, the whole idea of like stocks and bonds being opposite is just not happening right now. Bonds are just dumping, and they look like they're going to run bullish now. We might get a bullish run in bonds and stocks at the same time, which is interesting. On the inflation front, I like to cover this one a lot, but yeah, the interest rates, and this is the euro dollar futures, which is LIBOR and international bond market trading for the dollars. And so this is not breaking out into an inflationary zone. This held inside of our sort of neutral, normal zone that we've been in the last 40 years, and it looks to be going sideways. And so that's bullish if this thing just chills here. Vertical moves tend to create volatility. Sideways moves tend to reduce volatility. And so that's good for now. And similar thing on the VIX, looking at volatility here, is the VIX is just kind of chilling right here, and the VVIX I looked at last time is even a better indicator of that. The VVIX has come way down to levels from before COVID, so the volatility is down, so we should get less big snappy moves back and forth, and it should be more smooth, kind of just more smooth moves on the market that aren't jumping back and forth like crazy as volatility starts coming down. And that's generally a bullish sign. I looked at the call ratio. I can do that again. So we have a surge of calls that came in. And so, I don't know, people say that's bearish, but it's not usually bearish until you work your way to an extreme level on the call ratio, which is hard to use as an indicator. But when you're coming off a bottom, calls coming in is a good thing. And we got a ton of calls come in here. And so the whole thing about this is a short squeeze, right? When you get calls coming in, the market makers have to buy shares to cover the calls as the market goes up. So you get people buying, and then you get market makers buying to cover the calls, and then you get people in short positions have to buy to cover their shorts, and then you get a bigger rally, and then you get like the whole FOMO like thing, and then it blows off. So it's like this progression of everyone being on the buy side of the trade. That has a lot to do with the options and the shorts. And it's just sort of market mechanics. It has very little to do with fundamentals. Apologies to anyone that is really big on fundamentals right now, but just sort of the market mechanics seem to be taking control again. And meme stocks and zombie companies that have terrible PE ratios and whatnot can move huge, and companies that are stable or things like commodities may or may not do well. I saw, looking at commodities like FCX is running pretty good, and that's copper, and that may have something to do with China coming back on. We do have some material stocks that held up really well during the crash, bulling as well. So these stocks are good too. I'm holding all of these. I'm not holding silver. I'm holding Alcoa, Freeport-McMoRan, and the Uranium Royalty Corp. And these all look like they just kind of held up here and probably will bull as well. And so these are kind of fundamental plays that are good at the end of a credit cycle, and we'll see how the meme stocks fare against sort of the more fundamental plays. or sort of the late cycle plays. But I think that just going back to the S&P, to paint the idea that I have again. And so yeah, this is a good coil on the S&P that looks like it's going to break to the upside now. And I think it'll do that soon, especially looking at GameStop earlier. But I wanted to look at just the sort of the market levels here. I mean, I've seen a lot of people drawing this downtrend line or showing some kind of sweeping, like moving averages coming in where there's limited upside here before you run into a lot of resistance. And I don't think that's the case. I think that we have one weak resistance here, and that's about it. And the blue is decent resistance. I think this kind of zone will be important to look at, but this is a pretty big move up, and we have volatility decreasing. So, I mean, if we start climbing and volatility is dropping, it could be just a really smooth, boring kind of move up into the zone before the next area where it starts, flagging or doing weird stuff like that. That's kind of the idea I still have. I don't think I've seen anyone else painting that picture, but it's just this. Like, this is increasing swings, but not necessarily increasing volatility, because day to day, if you're not making big moves up and down day to day, the volatility can still decrease. And especially when you're moving up, you tend to make, smoother moves up and then choppier moves down. So you usually get a lot more volatility on the downside. But that's not like a hard and fast rule. But I still think that we're gonna get another meme stock kind of a run, and then I think the remaining meme stocks may crap out later this year, and then I think we'll get our real last bull market run to the top of the bubble. And well, we'll just have to see. That's kind of getting ahead of it, but sort of the minerals and materials stocks, I think, would be doing better on the last part of the bubble, or even like on the backside of the bubble after you go to the peak. Like, I don't know if GameStop would run like to the peak of the whole cycle top, but maybe it would, or like Tesla, maybe they would. We'll just have to see what's moving, And I guess let's look at some metals. So that the metals seem to be holding up okay. Gold's holding up. Silver has rallied a little bit, but it's kind of down, which is, it's weird for silver to be down when gold and copper are holding up, but it's like a little bit down. So the metals don't seem to be moving all that much. They don't seem to be that interesting. And I mean, maybe I don't know, they're volatile. Like, I don't know that they're better than holding cash. I think it's useful to just have cash, in a trading account. And I think we got some room left on oil. There's a little bit of space overhead. In terms of like oil crashing and pulling the market down, it doesn't look like it's going to happen right now. I don't know about trading oil. That's a mess. Bitcoin just seems to be bear flagging. And this is a weird one. I really don't know if Bitcoin's going to try to break out of here or not. But this just looks like a super lame bear flag. And I have this sort of descending wedge idea that's a super bearish kind of paint that would be 10 or lower if it falls across here. Yeah, if it falls across here. But if we get a good rally on the market, I'm sure Bitcoin will get out here, and then we'll have to figure out what's going on. But super dangerous. Super dangerous spots if you try to trade Bitcoin. And then the other altcoins are more dangerous, and they look worse. They're just kind of, ugh. That's like a bear flag that's like falling to the downside. So yeah, that's the thing for now. And so we'll see if GameStop can do a continuation run tomorrow, and if everything else goes with it. Because the last time GameStop moved, it was just one day in advance of the rest of the market moving, and then it was like a 3 or 4 day rally. So it if GameStop runs again, we may pull everything, to the end of the week or something like that. And that's just kind of the general thing. It looks to be kind of doing the pattern for now. So sticking to my guns for now. Happy trading, and yeah, cheers.